And then when you go to the air tokens, the proof of stake tokens, what are they backed by? They're backed by 3 people, if you're lucky, 8 people, right? 2 people. FTX was, and SRM and FTT was backed by one person's whim. And so this is going to be such a teachable moment, right? So vivid when people say, what is responsible? Well, I want all the computer power in the world and all of the energy that the U.S. Navy could muster, and I want it to be distributed across millions of nodes to defend my money. That's what Bitcoin is. And what is the rest of crypto? The rest of crypto is what Sam Bankman-Fried was, and what FTX was, and what FTT is. And Satoshi said, don't trust third parties. Well, he's right. It's like, if you have a bank in the Western world, and if there's an army of lawyers and an army of accountants, and if there's an army of Sarbanes-Oxley controls, you still shouldn't trust them. But the point really is, if you absolutely must trust a counterparty, you would like for it to be the counterparty that's run by a bunch of people that are worried they're going to go to jail if they screw up. When I signed that Sarbanes-Oxley statement, it's not just me signing. It's like there's a person behind a person behind a person behind a person that's looking, and they're all thinking this entire thing is going to crumple. And there's no way that like, if I had said, hey, I want to send $1 billion of Bitcoin to FTX, my entire accounting department would have resigned. My board of directors would have resigned. My CFO would have resigned. My GC would have resigned. And the auditors would have resigned. You understand? It's like when the advantage of being in a regulated entity in the United States is if you have an honest actor surrounded by honest actors, they're keeping each other honest, at least, because everybody's looking over everybody's shoulder. It doesn't make the system work as well as Bitcoin, but it makes the system work a hell of a lot better than FTX. The problem in FTX is Sam had nobody to answer to but himself. And your tip-off was like when one or two, he had 2 executives that resigned, Archie. The head of FTX US, right, and the head of Alameda, they resigned. That was your tip-off, but he only had 2. And so, ultimately, this is this maturing moment. Crypto has got to move from its youthful, Wild West, exuberant phase to it's got to be grown up. And the future of the industry is registered assets on regulated exchanges traded by institutions in bulk, spreading throughout the world. We know that's the future of the industry. We just don't know how big the industry is going to be. We don't know whether the industry is just Bitcoin and maybe a half dozen other things or a dozen things creeping into it, or whether the industry is 100,000 things. We don't know that because that really is in the hands of the SEC right now to determine, more so than anybody.
Yeah, look, I don't think any of the aspects of crypto will go away. I mean, I'm just looking at the attendances in spaces, and they're crammed, often multiples of the spaces discussing Bitcoin. So I think there's a huge appetite for everything that's going on in that space. The question, as you've said many times, is how that is going to actually be conducted. And at the moment, it's not being conducted ethically at all. And the industry needs to find a path towards that. Michael, I wanted to ask you about FASB, because I know your company has been subjected to what I'd call, unfair accounting regulations, but we seem to have some traction on that front.
Yeah, I think we got a good result about a month ago when FASB met and voted 7-0 to pursue a strategy of fair value accounting for Bitcoin. And I think the traditional accounting was indefinite and intangible, which meant you could only write them down, you could never write them up. And fair value accounting means that you can write them down and write them up. So fair value accounting will fix the balance sheets of any company that holds Bitcoin. They will fix the P&Ls. They will separate investment losses and investment gains from operating losses and operating gains. They will allow you to compare financial performance over various periods, so you can see whether you had more or less assets a year from now, a year ago than you have now. And they will allow people to compare financial assets across different companies. 10 companies that have the same amount of Bitcoin could look like they have a different amount of assets under indefinite and intangible accounting, but under fair value accounting, they will all look like they have the same amount of Bitcoin. And so it'll clean that up. I think the elephant in the room here that you would want to point is fair value accounting only works if you can establish the fair value of the asset. And the only digital asset which I think has a fair value right now, or that you could even argue as a fair value, is Bitcoin, because Bitcoin is a digital commodity that nobody controls. It's volatile because it's manipulated by the rest of the crypto industry and the macro industry, and we already know why it's volatile. We go back to the FTX story, but it is a fair asset that you could establish a fair value. I actually think that the other digital assets are digital securities, and until they're properly registered, trading on regulated exchanges, I don't think you can establish a fair value for them. For example, it would be a disaster to apply fair value accounting to the FTT token, right? So, because it was a manipulated air token. Mm-hmm. So I do think that what'll happen next is they will lay out more guideline about how you disclose these in tables. I think they'll have to lay out guidelines on transitions. I think there'll be a lot of community comment. I'm sure that this crypto carnage at FTX will cause them to stop and consider which assets should actually be deemed digital assets would they get a fair value. And I think the responsible thing would be just Bitcoin and nothing else until we've made more progress. But I think that those are all the elements to consider. And the timeline, we'll be into the middle of next year to the end of next year before any of this stuff might take effect, because they're going to have to give more guidance on disclosures, more guidance on transition. They're going to have to get feedback from the community, work through issues. And so I wouldn't expect to start to see changes in reporting in the next 12 months, but I do think it's auspicious for Bitcoin as an institutional treasury asset for sure.
Michael, you've been very generous with your time so far, but I just want to ask you one last question, and that's about Bitcoin, the price, and the market cycle that we're in. How do you see us leading? How do you see the path out of this current sort of market turmoil?
I think the Bitcoin, it goes through these boom and bust cycles, right? And we saw one extreme cycle, called it's a seasoning, annealing, maturing process where you clear out all of the crud and you clear out the tourist and you clear out the leverage. And one was March of 2020, where people that didn't have conviction got blown out of the asset class, and Bitcoin traded a huge amount in the 4,000 range, and then it had a pretty healthy recovery back up to 8,000-9,000 or something pretty quickly thereafter. And I think now we're something like 28 months later, or 2.5 years later, and we're seeing a huge amount of leverage getting cleared out of the system at the 16,000 level, so 4x where we were 2.5 years ago. And I think there's a massive base of support coming in, and people that were over levered, or the tourists, the people that don't understand Bitcoin and they're not believers, they're getting wiped out. The traders getting wiped out. But Archie, I think it's pretty important to make sure you've got perspective on what's going on here, because people can get caught up in the trading in the moment. When the market closed yesterday, right in the middle of the crypto carnage. If you went back and you looked at performance of every asset since MicroStrategy entered, we got into Bitcoin in the summer of 2020. And August 10th of 2020, we had not bought a dime of Bitcoin. Okay, if you go from August 10th of 2020 to market close yesterday, silver is down 25%. Gold is down 12%. NASDAQ is up 3.5%. The S&P is up 18%. Bitcoin is up 42%. So in that time period, Bitcoin outperformed NASDAQ by a factor of 10x, more than 10x, right? It more than doubled the performance of the S&P. It utterly destroyed gold. It utterly destroyed silver, right? For that matter, Archie, not to toot my own home, but even MicroStrategy is the same thing, a 40% return. We've tied our wagon to Bitcoin, and even though we're on a roller coaster, Bitcoin is outperforming, and that basically stabilizes our balance sheet. Let me give you one more stat. If you go back to the middle of summer of 2020, and you said, oh my, what am I going to do? I better buy a digital monopoly. If you had bought Amazon in the summer of 2020, and they have a monopoly on home delivery and a monopoly on cloud computing, they're down 37%, Archie. Netflix had a monopoly on home streaming, down 36%. Microsoft has a monopoly on all enterprise software in the world, must have, I don't know how many, 40 million companies as customers. Microsoft is up 16%. Google, a monopoly on YouTube and all search, they're up 32%. Apple, a monopoly on everything that moves on a phone, up 33%. Every big tech company got beat by Bitcoin, Archie. Bitcoin beat all big tech companies. Bitcoin beat every major asset class. And I am measuring the performance after 3 successive crypto crashes, right? And the $15 billion FTX meltdown. And, after the Fed has jacked interest rates by a factor of 40 on the short term. And so, with all these things, people, they can choose to get really worked up by fixating on the near term. But